It has been 1 week since the government shutdown, leaving the Fed without critical data. Azoria CEO James Fishback joins us. James, delaying key economic reports like consumer price index, jobs data. Is the Fed flying blind?
Well, good morning, Stuart. The Fed has actually been flying blind since President Trump took office in January. They've been blind to the fact that tariff inflation has not been a real thing. They've been blind to the fact that President Trump created 1.9 million jobs for native-born workers. They've been blind to the fact that third quarter GDP is on pace to be 4%, and second quarter GDP was revised upwards twice to 3.8%. So to answer your question, Jerome Powell and his crooked Fed board have been blind to the facts all along. And so a one-week government shutdown should not be an excuse for them to finally do the right thing, and that is to lower interest rates for working Americans all across this country. They are hurting. They can't afford mortgages. They can't afford loans. They cannot contribute to President Trump's golden age when Jerome Powell is being an obstinate, recalcitrant individual.
Crooked Fed board will remember that expression. Now, let's move on. Fed officials are sending mixed signals. I think we'll agree on that. In San Francisco, Fed President Mary Daly says the Fed should move forward with more rate cuts. Kansas City Fed President Jeff Schmidt says that will be too risky. And Fed Governor Stephen Miron says a calm bond market shows support for rate cuts. James, you add all that lot up, and the board seems to have no clear clue about where we're going.
Well, that's exactly right, Stuart. But I got to say, it's good to have open debate on the Fed board again, and President Trump's pick for Fed Governor Stephen Miron has delivered that. Look at San Francisco Fed President Mary Daly and Stephen Miron. Very different politically, very different backgrounds, but they both agree interest rates are way too high, and we have to keep lowering them if we're going to keep this economy going strong. The truth of the matter is that, Stuart, the last time the Federal Reserve raised interest rates to the exact same level that they are at right now, headline inflation was 6%. Since President Trump took office, headline CPI inflation has annualized 1.9%. Interest rates are too high, it's hurting people, and it's good to see Steve Miron step up, come to the Fed board with substance and logic and evidence, and actually find agreement with those on the other side of the aisle that Jerome Powell and the Lisa Cooks on the board are dead wrong to not want to lower interest rates far more than is expected.
Okay, you got 30 seconds, and that's all we've got. But you've got to tell me why sharply lower interest rates now would not create a spike in inflation. Go.
Let's do it. All right, so very, very simply, actually, interest rates being too high is creating inflation. Here's why. Just look at the housing market, Stuart. If you're a construction builder, I'm here in Orlando, I met with them yesterday. If you're a construction builder, you cannot get a loan. If you cannot get a loan, you cannot build new houses and bring supply onto the market. When you can bring supply onto the market because of lower interest rates, what you can do is bring more homes onto the market, lower home prices, and actually lower inflation for folks who built our state and built our country.
Okay, that was just under 30 seconds. Not bad, James. You can come back anytime you like. James Fishback, you're all right. Thanks very much, James. See you soon.
Thanks, Stuart.